Good day and welcome to the Q1 FY2024 earnings conference call of Brigade Enterprises Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. M.R. Jayashankar, Executive Chairman of the company. Thank you, and over to you, sir.
Thank you, Aman. Good afternoon, ladies and gentlemen. Welcome to the Brigade Enterprises Q1 Financial Year 24 earnings call. I am joined by our Managing Director, Ms. Pavitra Shankar, Joint Managing Director, Ms. Nirupa Shankar, our Executive Directors, Mr. Roshan Matthew, Mr. Amar Mysore, and Mr. Pradyumna Krishna Kumar, and Senior Management Team, Mr. Atul Goyal, CFO, Mr. Om Prakash, Company Secretary, and others. I am happy to share some of the highlights of the group. As a validation of our consistent performance and good governance, our credit rating was upgraded recently by CRISIL from A+ positive to AA- stable in early August. We are now rated AA- stable by both ICRA and CRISIL. Last week, Brigade won the bid for a 9.71 acres land parcel in the premium area of Neopolis, Phase 2 at Kokapet in Hyderabad. This is the largest plot in the Phase 2 auction by the HMDA. The total transaction size is rupees 660 crores, valued at around 68 crores an acre, with a development potential of about 3.5 million square feet. The transaction underscores our commitment to Hyderabad as a growing market for Brigade. For that matter, in the last 1 year, we have totally signed about 23 million square feet of developable space in different cities. Sustainability and social responsibility are among our core values at Brigade. We have announced our ESG strategy this year in this year's sustainability report, in which we have committed to 11 new ESG policies. We have initiated the GRESB rating and process, and more importantly, have set an ambitious target to become net zero by 2045, among others. The first quarter in the new financial year has seen consistent performance across all business verticals in terms of growth and cash flows. However, the reporting impact of the Ind AS 115 standard has resulted in a drop in Q1 revenue, which is based on the value of registrations done and units handed over to customers. There have been teething issues with the new state government registration software called Kaveri 2, which is creating quite a bit of issues at the sub-registrar's offices for the registering authorities in Karnataka. This led to a delay in registrations expected for the quarter 1. This matter should resolve itself in the coming quarters, resulting in improved revenue and margins. During this financial year, our team is geared up to hand over about 4,500 residential units with an area of approximately 5 million square feet, valued at over 3,000 crores. Multiple phases of Brigade Cornerstone Utopia, Brigade El Dorado, Brigade Citadel, and Brigade Orchards are in the handover stage. Coming to the residential segment, the segment continued its consistent performance with new sales of 1.46 million square feet, valued at about rupees 996 crores in Q1. There has been a steady increase in pricing realization, which now stands at over rupees 6,800 rupees per square foot, compared to 6,200 rupees last quarter. Excellent sales, supported by steady construction progress, has led to a strong collection of rupees 836 crores, which has led to zero debt in the residential segment as of Q1. Similar to the overall industry, inventory overhang has reduced in our portfolio due to good customer demand. Industry-wide, there has also been fewer launches in Bangalore, Chennai, and Hyderabad when compared to cities like Delhi, Mumbai, and Pune. We We have planned 7.87 million square feet of residential launches in the next 3 to 4 quarters. However, these are highly dependent on timely approvals. In Karnataka, the change in state government has led to delays in approval process across the board for new project launches, as well as issue of completion certificates, or what we call as occupancy certificates. We are hopeful that the issue will get resolved in the coming quarters to maintain our launch timelines. The demand on ground for the residential sector stays strong, which we witnessed at our recently concluded flagship event, Brigade Showcase, which is being conducted consistently for the past 16 years. It resulted in excellent footfalls and inquiries. As regards the office segment, occupiers continue to focus on return to office, with office parks having an improved occupancy range of 50 to 75%. Brigade leased 61,000 square feet this quarter. Leasing was muted due to the availability of only SEZ office area in our portfolio. Existing tenants took up additional space, and this trend is likely to continue. However, despite the relatively slow quarter, there has been an increased momentum in leasing inquiries in Q2 FY2024, even for SEZ spaces. Brigade has an active pipeline for its remaining completed assets. With the transactions closed in Q1 financial year 24, Brigade has achieved a leasing of 84% of its available inventory, with 100% leasing under the non-SEZ category. In line with the market trend, 85% of the transactions for the quarter were of small and medium size, which is less than 50,000 square feet. Leasing segment saw a 22% year-on-year increase in the quarterly leasing revenue from rupees 175 crores to rupees 213 crores. Q1 financial year 24 with a stable office rental collection at 99%. Coming to retail segment, during Q1 FY24, there was a 12% like-to-like growth of retail sales consumption in comparison to Q1 FY23 across the mall retail SBU. Retail categories like electronics, eyewear, jewelry, watches, beauty and cosmetics, travel gears were the top performers in terms of their trading density. All these categories grew at an average of more than 25% over Q1 23, even though the multiplex segment degrew by 37% in the compared to financial year 23 due to low movie content. Overall, as retail SBU, all our malls are leased to, at a combined total of 91%, with our flagship mall, Orion Mall Brigade Gateway, leased at 99% currently. We are expected to close 45,000 square feet of new brands that are under fit-out to commence their operations by Q3 FY24 across our retail SBU. As regards hospitality business, it has continuing its growth story in Q1 financial year 24 as well. There has been an all-round improvement in our numbers, with both our top line and bottom line registering higher than Q1 FY23 numbers. Our revenues increased by 1%, ARRs have gone up by 16%, and AGOP is up by 7% when compared to Q1 of financial year 23. Our occupancy showed a marginal drop by 5%, but this should improve in the coming quarter. The F&B segment has seen an encouraging growth due to banquet events, both corporate and social gatherings. Number of domestic air passengers in India has been steadily surpassing the pre-COVID levels. In May 23, domestic air travel increased by 15% year-on-year. It is for the first time since December 2019. That brings me to the end of our operational highlights. Atul Goyal, our CFO, will now take you through the financial highlights. Thank you. Jai Hind.
Thank you, sir. Good afternoon. On behalf of the company, we welcome you to the earnings call of Q1 FY2024. Chairman has already shared the operation highlights. I'll be sharing some key financial highlights for the quarter. As informed by him, our rating has been upgraded to AA-, stable from A+ positive by CRISIL in August. Of course, ICRA has already upgraded us in the first quarter. Leasing and hospitality business has been doing well and achieved PBT of 19 crores and rupees 11 crores respectively during the quarter. Good sales and collection in residential segment has helped us achieve zero debt in residential segment. To start with company's financial update for Q1 FY24, all of verticals of the company continued steady performance in Q1 FY24. The real estate segment clocked a turnover of 371 crores, whereas the same for Q1 FY23 stood at 655 crores. There is a decline in real estate revenue and PBT, which is mainly due to less registrations as enumerated by the chairman in his speech, and no project closures. However, if you see, our gross profit for real estate is at 27%, which is in line with the previous quarters. So gross profit we have maintained it solely because of the lower revenue that you are looking at, a lower PBT in real estate segment. The leasing segment clocked a turnover of 213 crores, whereas the same for Q1 FY23 stood at 175 crores. EBITDA stood at 160 crores, which is 75% of the leasing revenue. The hospitality segment clocked a turnover of 102 crores, an increase of 13% from same quarter last financial with an EBITDA of 38 crores. EBITDA margin stood at 38% in Q1 FY24. The consolidated revenue for Q1 FY24 stood at 685 crores as against 920 crores in Q1 FY23 with an EBITDA of 206 crores. EBITDA margin stood at 30%. Consolidated PAT after minority interest for Q1 FY24 is 39 crores. Total collection in Q1 stood at 1244 crores as compared to 1210 crores in Q1 FY23. Cash flow from operating activities stood at 267 crores during Q1 FY24. Coming to the debt and liquidity position, we continue to have adequate liquidity and undrawn credit lines from the financial institutions. Our average cost of debt has been contained at 8.72%, increase of 107 bips, though repo rate has increased by 250 bips. Gross debt of the entity stood at 3783 crores, and this has been reducing very consistently. The cash and cash equivalent was 1771 crores as on 30th June 23. Consequently, the company's net debt outstanding is 2012 crores, out of which BS share is 1374 crores. Almost 76% of the debt pertains to the commercial portion, which is backed by the rental income. Debt equity ratio stood at 0.52 as of June 23. I will now hand it back to the moderator for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Adidev Chattopadhyay from ICICI Securities. Please go ahead.
Yeah, good evening, everyone. I've got a few questions. The first thing is on our new Hyderabad land acquisition. I think Mr. Jayashankar alluded to the saleable area would be in excess of 3 million square feet. If you could just help us understand the FSI utilization over here and what would be the indicative GDV for this project which we will add. And secondly, the land payment I think is almost 700 crores with the stamp duty. So will it all be paid out this year or is it payable in tranches? That is the first question.
Yeah, hi Adidev, this is Amar here. So Like Chairman said, it is about 660 crores is the land value, but with the stamp duty registration, it will go up to 700. The first installment is already getting due next week, which is about 200 crores and odd, which we are getting ready to pay. The whole thing needs to be paid in 90 days. So that's what we're aiming for. In terms of potential, it is about, say, 3.5 million square feet. And FSI in Hyderabad is, everybody is looking at unlimited FSI, but we'll look at close to, say, 8 FSI, around that. And we're just getting started with the master plan. So we'll probably next call we'll have more updates for you.
Okay, but if you could just help us understand the current residential rates or whatever you are planning, like over there, the indicative GDV based on the rates over there.
So I'll let Pavitra answer that because she looks at residential closely.
Hard to say what we will launch at, etc. But we do know that the existing projects in the area were selling at around 8.5, 8.8, maybe 9. But as soon as our transaction was announced, I think the rates already jumped to 10,000 per square foot for residential there. That said, we're not committing yet on what rates, what the plans are. They're still under design stage right now.
Okay. And just to clarify, so this entire land payment of 700 crores will go in the next 3 months. Plus, we also have another outstanding payment of 700 crores, right, which is still there as of March, I guess. So just to understand correctly, the entire 1,300 crores will be paid out this year?
So, Atul here, it depends upon the land closure. Definitely, 700 crores will definitely be paid in 90 days. Some other lands which are going to get closed, but I don't think those 721 crores will get spent during this year. It will take time as and when land clearance happens.
Okay, but we will not be taking on any additional debt, right? It will be mainly financed through our cash balance, right, on books. 1,700 crores plus of cash which we have.
So we are planning not to take any debt. We'll see as the things progress.
Okay, fine, sure. So thank you. That's very helpful. I'll come back in the queue with more questions. Sure.
Thank you. The next question is from the line of Parikshit Kanpal from HDFC Securities. Please go ahead.
Yeah, hi. Sir, for a decent quarter. So just on the Hyderabad land in Kokapet, so besides the land outgo of almost 700 crores, so are there any other premium payments involved in Hyderabad, or is this the total cost including the premiums and all?
Sorry. It is a total cost. There is no further premium payment other than approval costs.
Okay. I mean, so because if I do the math, I think you not make, even at 10,000 rupees a square feet, so you will not make more than 25% EBITDA on this. The 660 is the land cost, even if I take construction cost, because I think this will be a high density development at 8 FSI, so almost 5,000 rupees, maybe the construction cost. That itself is about 1,700, and then SGN and other will be another 200. So is it right to assume that this project will have maybe 25% EBITDA margin, so in line with our existing margin?
We expect it to be 25 to 30% EBITDA margin.
Okay. So close to 30% you expect EBITDA to be made. Hello?
Yes, please.
Yes, sir, I missed you. So you said about 30%, you said?
Yeah, between 25 to 30% is what it is.
Okay, for sure. So my second question is on, if I see the realization, so just wanted a little more granularity on the realization, especially in the Bangalore market. So we have seen some of your peers, other peers now launching projects closer to about 10,000 rupees a square feet average realization. And our realization on the portfolio is still at much lower levels, but I think it touched 6,800 this quarter. So are the new launches which are planned, so what kind of realization we are targeting, or what kind of segments on a realization basis these projects will be in Bangalore, especially in Bangalore?
See, we have a combination. Some of the new launches of ours will also be in the range of 10,000. Some may be at 8,500, 9,000. Some will be at 6,000, which are a little bit in the affordable housing category. So it is Average, I cannot say it will be 10,000. Average will be definitely upwards of 6,800. It will be upwards. Gradually it will going up.
Okay. And just the last question, sir, on BTG and WTC. So, I mean, you did said that the physical occupancies are now touching closer to maybe 50 to 75%. But for these two assets within the campus, so what kind of physical occupancies started hitting now after the return to office movement?
The occupancy here is also between 65 to 75%. In fact, Chennai is showing better occupancy and return to office numbers. Bangalore is around 65% and the Chennai project is around 75%.
You said Bangalore is 65 and Chennai is 75, right?
Yeah.
Okay. Okay, sir. Thank you and wish you all the best. Those were my questions.
Thank you.
Thank you. The next question is from the line of Karan Khanna from Ambit Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. So firstly, while appreciating that historically the first quarter is usually the softest quarter for the company, what we notice is that first quarter typically accounts for 80 to 20% of your full year pre-sales number. So is it safe to assume that this trend will continue for rest of FY24 as well? Or because your launches will be piled up towards the latter half of the year, you believe that the full year number will possibly be higher?
Hi, Karan. So we've also communicated earlier that our launches will be towards second half of the year. Despite that, I think Q1 has been pretty strong. So depending on the launches, as we mentioned earlier also, assuming that there's no delay in approvals, we should certainly see good numbers this year. I think the demand picture is very strong. It's a question of getting the launches out. So I don't see any issue with meeting the numbers if we have that.
Sure. Thanks for the clarification. Just as a follow-up, how should we think about the launch pipeline of 7.87 million square feet? Because in June last year, you spoke about a rolling 4-quarter launch pipeline of 7.6 million square feet. But if I look at the actual launches over the last 4 quarters, this has totaled to only 4.95 million square feet. So just curious to understand is the 7.87 million square feet rolling 4-quarter launch pipeline which you have suggested in your presentation on slide number 28, is there any risk to that number?
No, I think see Chennai, some of the projects that we thought would come into FY20 or the previous rolling 4 quarters are now in the next. So that's the reason. Also, we had expected to have a couple of launches in Q1, which just basically missed the end of the quarter. So all that will be included in the next 4 quarters.
So, secondly, on your hospitality portfolio, while acknowledging that 2Q is usually the seasonally weakest quarter, with the Cricket World Cup around the corner, are you seeing encouraging trends in terms of the inquiries resulting from this, given Bangalore is also hosting few of the matches in October and November? And as a follow-up, directionally, how are you seeing the trends on share of FTAs in your hotels?
Yeah, so the Q1 for this year was quite good compared to Q1 of last year. So you'll see improvement on pretty much all parameters apart from occupancy. The next quarter is going to be fairly good as well. July was a little slow, but August and September should be good months. And of course, the third quarter and fourth quarter are usually the strongest for hospitality. So the momentum is good, and I think we mentioned earlier air traffic numbers. So the momentum is very good, even in terms of food and beverage and rooms as well.
And in terms of the share of FTAs, is that increasing in your portfolio?
You mean foreign travelers?
That's right, foreign tourists.
Foreign tourists is not as high as it was. In fact, it's still a fraction of what it was pre-COVID. So I would say it's still maybe 25-30% of what it was pre-COVID. But I think the demand is coming mostly from the domestic segment.
Sure. And lastly, a bookkeeping question. Just wanted to understand, if I'm looking at slide number 8, you started reporting the pre-sales number, including the landowner shares. So is that going to be the trend going forward as well, or how are you going to report the pre-sales number?
Yeah, that's going to be the trend going forward. We actually looked at what other peers are also doing in the market. Previously, we were not adding the area share, so that's what we started to do. That said, it doesn't impact any of the cash flow picture that we've been sharing in the past, whatever's on slide 10. all of that continues to stay the same, so there's no material effect.
Sure. Thank you, and I'll come back in the queue. Thank you, and all the best.
Thank you. The next question is on the line of Pritesh Sheth from Motilal Oswal. Please go ahead.
Yeah, thanks for the opportunity. First question is just trying to understand your business development strategy from here on, specifically in the markets like Chennai and Hyderabad. So Hyderabad, we have one large project now and another million square feet, which we are already in conversation. So that should have another, roughly around 4,000, 5,000 crore of revenue potential from that market. And Chennai also, we already tied up, a lot of lands. So would that be it for near term in terms of Chennai and Hyderabad's new acquisition plans, and focus would be on churning our inventory in Bangalore, or how should we think about it?
See, we have signed quite a few in Chennai and recently Hyderabad. It does not mean we are not looking at opportunities. But instead of buying more, we have bought quite a bit in Chennai, and now with this major acquisition in Hyderabad, we may move towards a bit more of joint development projects. I think both markets along with Bangalore offers sufficient opportunities. So we will continue to look for, and intention is to do better and better in the overall sales volume from our 6.3, 6.5 million square feet currently. We would like to reach 10 million square feet as early as possible.
Sure. And out of the 10 million...
Market conditions are also favorable.
Sure. And out of the 10 million square feet, roughly 40% would come from Chennai and Hyderabad?
Probably, yeah, more or less. I think the intention is to even aim higher if possible, about 50% between those two markets, and about 50% from Bangalore. But there is I would say, we have done this much and no further, not that kind of a approach is not there. We will evaluate continuously the opportunities and the market conditions and the areas in which we operate and in the segments we operate, and then take a call.
Sure. So for that 50%, 2.5 million square feet contribution from each of the market, so definitely then we'll have to look at more projects to be added in both the markets. Is the right understanding?
Yes, correct.
Got it. And secondly, on launches, so Chennai, the Q4 launch plan remains intact, or there has been some delay on it? Any clarity we have right now?
No, the Q4 launch plan is the same. We're hoping to meet those deadlines. Should come into Q4.
Great. And lastly, Padmini Tech Valley, 0.27 million square feet launched this quarter, and I think it also delivered. So we'll be looking to sell it outright, right?
No, it is not yet delivered. It is getting completed. It should get completed in, I think, quarter 3. Q3 it should get completed. So some negotiations for leasing is on. So we are open to retain. We are open to sell. So I think it is there is no definite decision that it should be only sold or it should be retained. So we are flexible. Depending on the situation, we are flexible.
Got it. That's helpful. And just lastly, if you can provide breakup of collections between the segments for the quarter.
Yeah, sure. Just for residential, it is 836 crores. Commercial sale is 43 crores. Commercial lease is 149 crores. Retail is 52 crores. Hospitality is 125 crores. And PMS, maintenance services, is around 40 crores. Overall, 245 crores.
Got it. Thanks. That's helpful. All the best.
Thank you.
Thank you. The The next question is from the line of Rakesh Wadhwani from Monarch AIF. Please go ahead.
I thank you for the opportunity. Just wanted to understand, as we have given the guidance of double-digit volume growth for the residential business, so how do we expect from where do we expect the volume growth from like new business launches or the existing, because the existing inventory is coming down every quarter?
Excuse me, your voice is not clear.
Okay. Am I audible, sir?
Sir, your voice is still muffled a little bit. Can I request you to use the handset?
Sure. Is it clear? Is it better?
Yes, go ahead, please.
Hi. Sorry for the disturbance. So in the last Concall, we had given the guidance that we are expecting a double-digit or high teens volume growth in the residential business, and so just wanted to know what will be the growth drivers? Will it be the new launches that will be the growth driver, or from the existing inventory? So how do you expect the growth in that?
Yeah. So generally, while we don't give guidance year on year, we have always targeted like you said, like a double-digit growth year for the residential portfolio. Last year saw a 36% increase. Our launches for this year are mainly what is driving the sales expectation for this year. So a lot of it is dependent on the new launches coming, which we had indicated earlier would be in the second half of the year. So provided that happens, I think we'll see pretty strong growth in our residential sales this year. So we're still confident of the market conditions and so on. It's a matter of getting the approvals and being able to launch.
Okay. And second question on the EBITDA margin for the residential segment. If we look at the EBITDA margin for the residential segment, so before COVID, like before FY20, we were doing EBITDA margin of 23 to 24 to 25%. But after 2020, after COVID, it has come down. So just wanted to know what will be the sustainable EBITDA margin for the residential business, because all the things are in our favor. Raw material prices are coming down. We have increased the realization also, and the scale has also gone up before COVID. Like before COVID and now, scale has become double.
Thank you. We are accounting on AS 115, and the revenue depends upon the recognition or the registration of the properties. So because of the variation in the revenue, EBITDA margins have been varying, because you have to absorb your fixed cost for the company as well. So if you see, let's talk on gross profit. You can see from 25 or so from last 4 years, profit for real estate has been in the range of 25 to 30%. That we have maintained. It's only that because of the variation in the revenues, because we are going on a completed method, this variation is coming.
So can you say 23 to 24% is a sustainable EBITDA margin for residential business?
It can, yes.
Okay, 20. And one last question. Can you please talk about the GDV, the gross development value, or the sellable value for the projects that are going to be launched in the next 4 quarters? That's 7.8 million. What is the sales value, potential sales value for these projects?
Yeah, so just to answer that, so we've communicated about 7.89 million square feet of residential launches this year. The GDV of that should be around 6,700 crores. The PL share of that would be around 4,400 crores. And that's again dependent on the launches happening on time.
Okay. And the share of the Brigade, just have been repeat, the share of Brigade will be 4,400 crores.
Sorry?
4,000. The share of the Brigade.
That is the Brigade share.
Okay, 4,500 crores. Okay. Thank you. All the best.
Thank you. The next question is from the line of Parvez Qazi from Nuvama Group. Please go ahead.
Hi, good afternoon, and thanks for taking my question. So my first question is to Pavitra. This is regarding the recent Hyderabad land that we won in the auction. So I believe in the same Neopolis layout, government had conducted an auction 2 years back also. I guess the average land prices during that auction were somewhere closer to about 40 odd crore. If you look at the current auction, I guess average land prices have moved up to 73 crore per acre. Now I understand the land plots, etc., might not be strictly comparable, but I mean, this kind of price appreciation in terms of land value, doesn't it make you kind of slightly apprehensive towards what is happening in the Hyderabad real estate market?
Ahmed will answer that.
Yeah, see, we also examined the phase 1 part of the Neopolis auction back in October 2021. Back then, we were not convinced, and we were more like the infrastructure was not in place. Now we see the infrastructure in place, and then the current rates, the way the selling prices that are going on, we are convinced that the price that we acquired is less than the average 73 crores per acre. We acquired it at 68 crores per acre. So we are in good stead, and the numbers add up for us.
Okay. My second question is about the retail business. Obviously, consumption has picked up across the board. We also seem to be doing quite well. So, for the future, do we have any plans to develop new malls or retail space? If yes, whether we are okay with developing standalone malls or we want to do it as part of any integrated project only?
So it will be a combination for us. So, for instance, in this Hyderabad project that we plan to do, we might look at some retail, and generally in mixed-use developments, we will look at some amount of retail. We have Brigade Utopia coming up, so there is some amount of retail there. We have Brigade Valencia, which is we're looking at some amount of retail there. So I think if you look at the kind of standalones that can be developed in a particular city, it is limited to per micro market. So what we feel as the future is also creating more neighborhood-style malls and adding retail more as a social infrastructure to the larger projects and mixed-use developments that we have. If and when the opportunity presents itself, then we're open to doing standalone malls as well.
Thanks. And lastly, some data questions for Atul sir. What would have been the geographical split of sales this quarter? And second, what was the contribution from BTG and WTC to rentals this quarter? Thank you.
So, first question, Pavitra will reply. From BTG, the rental was 40 crores for Q1, and for PREPL it was 31 crores.
For residential sales, 88% came from Bangalore, 10% from Chennai, and the rest from, Mysore, Hyderabad, Bangalore.
Thank you.
Thank you. The next question is from the line of Biplab Debbarma from Antique Stock. Please go ahead.
Good afternoon. Thanks for taking the call. So, on the debt, do you intend to keep the debt in residential segment at this level of zero debt or very low level of debt? Is this our long-term plan?
The long-term plan is difficult, but yes, we always endeavor that our debt should be minimum, and we have always been conservative on the debt. Residential cycle is very good, and our projects are selling well. So yes, of course, till cycle is going on, we are able to sell. We don't intend to take any debt on the residential part.
Okay, that's good. And second thing, sir, just I don't know whether I missed the point. Sir, the EBITDA margin that you have given in the segmental.
Your voice is not very clear. Please come closer to the mic.
Hello.
Yes.
Yeah, I'm using the handset. Hope this is okay.
Yes.
So basically the EBITDA margin in the residential segment is showing 6%. And in the last 4-5 quarters, it has been low in, say, 12-13% range. So, just wondering, when do we expect to see the margin above 20-25%, around between 20 to 25% in the residential segment?
See, I'll again clarify this. The revenues are based on AN 115. So, as and when registration happened, you are recognizing the revenue. See, the important parameter is that your gross profit is maintained, and I would like to, if you can compare for last 7, 8, or maybe 3, 4 years, we have maintained our gross profit margins at 30-35%, 25 to 30% always. So it's all based on the revenue. If you go on POCM, this will look much better. So this I cannot help, because this is a law of land and completed. This is a completed contract revenue. So as and when registrations are going to happen, and as and when project closures are going to happen, this variation will always remain.
I just want to add to that, some of the projects coming up for handover and completion, those are higher margin projects. We launched them in FY2018-19. So as these come, you will see an improvement in the margins. Okay.
That's great. And one final question, besides the land parcel for Hyderabad that recently that you have acquired, how much more land payment are pending? How much more pending payment for land purchase as of today?
It's around the land payment right now pending is around 721 crores. Besides 620 crores or 700 crores which we have to pay, so overall is around 1400 crores.
And that will be paid over the next 1-2 years, around ballpark?
Oh, yeah, it depends. See, Hyderabad will be paid definitely. Out of this, maybe 50 to 70% or 60% may paid this year. Otherwise, it will go to the next year. So it's a rolling cycle. As and when land gets cleared, all due diligence happens, then we pay. So it's a rolling cycle. So you cannot say that we'll pay everything in this year.
Okay. Thanks. That's all.
Thank you. The next question is from the line of Akul Brochwala from Ocean Dial. It seems we have lost the line for Akul. We'll move to the next question. That is from the line of Ritika Agarwal from Valley Quest. Please go ahead.
Hi, sir. Thank you for taking my question. My question is for Atul, sir. So FY23 sales 4,100 crores.
I cannot hear you. Please, your voice is not clear.
One second. Is it better now?
Yeah, much better.
Yeah. So my question is sales for FY23, which is 4,100 crore. I wanted to clarify if this is entirely Brigade's share of sales, or is there some JV share, revenue share, which is included in this number?
Yeah.
So last year we did not include the landowner area share. So that is a change that has happened only from this quarter. So the numbers we shared last year were not were before this change.
Okay. Till FY23 you were not including landowners or revenue share. JV share was not included in the sales number, while from FY24 that will be grossed up and shown as sales value. Would that understanding be correct?
No, I would say that in terms of operational numbers, such as sales and booking value, we were not including the landowner area share. However, the landowner revenue share was included. What we've done this time is correct that, so that we are declaring the 100% sales booking values as well as area. But as I clarified earlier, in terms of our cash flows, there is no change. We've always communicated only the net Brigade share, whether it was FY23 and before, or whether it is Q1 and going forward.
Got that, ma'am. So, yeah, in FY23, this 4,100 would have included revenue share, as you mentioned. So, what would be revenue share and what would be Brigade's core sales?
So it is, Brigade share is typically 85% across the board. If you take deal by deal, of course, it is different. There are some lands which we own. There are different sharing percentages. There are some that are JV projects. So across the board, last year, you could have said around 80-85%.
Got it. And this quarter particularly, what would be Brigade's core share? As this quarter, I believe, would include revenue share plus the area share that we started putting that.
50%. Hello?
Yeah.
I said 80%.
Okay. Sure, ma'am. Thank you so much.
Thank you. The next question is from the line of Adidev Chattopadhyay from ICICI Securities. Please go ahead.
Yeah, thanks for the follow-up. So question again on Hyderabad. So when is the earliest when we can see the launch of this project? And obviously, I don't think it is included in your launch pipeline. So just that.
Take, of course, since it's a high-value property, etc., we will try our best to launch as early as possible. But it is due to, I would say, environmental clearances and others. It is safe to say it can take 10 to 12 months.
Okay, so sometime in second half of next year is a reasonable assumption, right? Sometime next Diwali or around next festive season. Okay. The second question is on the leasing. Obviously, now with that SEZ issue persists. So I think earlier we had a leasing target by March 24 to lease the entire thing out. So where are we on that guidance and visibility? Because you have mentioned you have a strong pipeline now, obviously all for SEZ space. So could you help us understand, is it a safe assumption to assume 100% occupancy in another 9 months?
See, the target and efforts remains the same. It is definitely we want to, lease 100% within FY24. Sometimes things are not fully within our control, but the team is making all-out efforts to certainly lease as early as possible.
Okay, so but anything...
We will also be disappointed.
Yeah. So, but conservatively, we should get to 90%. What do you sense at the overall portfolio level from 84%? Sorry, sir?
Yeah, it should happen, I said.
Okay. And so just another last question, sorry to again ask on Hyderabad. So see, many developers have now bought land in the auction. So how have you assessed the demand supply in that market? Because they will have other developers also trying to make use of the unlimited FSI, right? And how would you ensure that if in case other developers around you launch at a lower price, right? And it utilize 10, 12 FSI, I don't know. So what are your thoughts about that? Yeah.
See, currently I may not be able to spell out, or I would not like to spell out everything, but I will, we are confident we'll come out with a winning strategy.
Okay, sir. Okay, fine. Yeah, thank you.
Strategy to do it. I think we'll be confident we'll do it.
Okay, sir. Okay, sir. Thank you and all the best. Yeah.
Thank you. The next question is from the line of Akul Brochwala from Ocean Dial Asset Management. Please go ahead.
Yeah, thanks for the opportunity. On the delay in recognition of revenue because of NDS, just wanted some clarification. What would be the extent of inventory that is ready to be delivered or sort of got delayed because of this issue? Can you just quantify that in terms of area or else in terms of value?
Yeah, it should be in the range of 3 to 4 million, where completion may happen and we would recognize, but slowly and 5 million.
Yeah, we had said around the plan is that we would rent million square feet across 4,500 units this year. But we also indicated that a lot of that is dependent on coming in time for OC occupancy certificate and completion certificate. And also the system sort of settling down in Karnataka, but so far it's been improving. So hopefully we should be able to meet that.
Okay, fair point. And secondly, in terms of our leasing portfolio, has there been any significant escalations towards the existing tenants this quarter, or is it purely because of the new leasing that we have done has led to sequential increase in revenues? So just wanted to understand the factors attributing to sequential increase.
Yeah, see, all the leases are going as per the contract. We have a standard increase in the rentals. It could be 5% per annum or 15% every 3 years, and it's going as per that. It's the sequential increase. And yes, in some cases, the fit-outs are happening. Slowly, that will come into the revenue system.
Understood. And lastly, you mentioned in the annual report that you are also looking towards, warehousing, data center, and, sort of other avenues. So any near-term, sort of capital allocation plans that you're looking at, or will this be a medium-term strategy going forward?
So we have a 25-acre plot that we're looking to explore a data center. Some of the plans are being done up. So we'll have an update soon. It will be a little speculative, so it's more like trying to do a build to suit. So maybe once we have more clarity, we'll get that.
Okay, and this will be around Bangalore only, or is it some other city?
Yes.
Okay.
Yes, it's in the northern part of Bangalore.
Okay, fair point. Understood. Thank you so much, and wish you all the best.
Thanks.
Thank you. Ladies and gentlemen, that would be our last question for today. I now hand the conference over to Ms. Pavitra Shankar, Managing Director, for closing comments. Thank you, and over to you, ma'am.
Good afternoon. Before we close, we would like to share a few other highlights. Brigade Enterprises Limited and Brigade Hospitality Services Limited have been recognized among India's top 100 best mid-sized companies to work for in 2023 in the Great Place to Work ranking. This is a survey conducted by Economic Times and the globally renowned Great Place to Work Institute. We are now celebrating 13 years of being on this list. In the latest release of the Brand X report from Track to Realty, Brigade moved up 3 places as the second best brand among all real estate developers in the country. Brand X is a yearly report that assesses real estate brands on trust, return on investment, quality, reputation, buyers' endorsements, and brand recall. The Brigade Foundation celebrates its 20th anniversary this year, and we're very proud of the impact from our not-for-profit initiatives over the past 2 decades. We reiterate our commitment to make a difference in the communities in which we operate. The Indian Music Experience Museum, supported by Brigade, has been voted number 1 in the list of things to do in Bengaluru in the TripAdvisor People's Choice category. We encourage all those listening to plan a trip to this wonderful place the next time you're in our city. Some of the accolades and recognitions we received in the last quarter are: Brigade Tech Gardens in Whitefield, Bangalore, received an award for the best commercial high-rise development at the Asia Pacific Property Awards 23-24. Orion Mall at Brigade Gateway was honored with the title of the Most Admired Shopping Center of the Year 2023 Metro South at MEPIC 2023. World Trade Center Chennai won Best Commercial Project of the Year at the FICCI RISA Awards 2023. That's a wrap for our earnings call. Thank you.
Thank you very much. Ladies and gentlemen, on behalf of Brigade Enterprises Limited, that concludes today's call. Thank you all for joining us, and you may now disconnect your lines. Thank you.